Hey everybody, it's Pete. Welcome to Stock Trading Pro. In today's episode of Stock Market Live, we're going to discuss sector rotation. And a big part of sector rotation today is everybody leaning too far on one side of the boat, and will that boat tip over? My trading plan for this week, the stock picks that I'm looking at this week, are probably going to be a little bit leaning more towards 70% short sales, 30% on the buy side this week. And we're actually going to break it down. We're going to go a little deeper into sector rotation. We're going to do a scan together. We're going to pick a bunch of stocks that we're going to take a look at. These plays are actually for the week. I'm looking for these plays to actually turn themselves out. And the big question we're going to talk about today, which a lot of people bring up, is what's the difference between a short covering rally and a new trend? When does a new trend start? And we're going to map out the exact price action that we're going to look for this week that will tell us that the short covering rally that we had last week, and make no mistake about it, it was a short covering rally. What we need to see this week in order to step on the gas a little bit more to be buying the best stocks right now. I'm telling you, I am leaning a little bit more on the short side. We're going to talk a little bit about short selling today. If you haven't done that, I will tell you that short selling has been a monster part of our community, especially since 2022 started. Understanding how to make money on both sides of the market is very important. It's critical. And even if you're not looking to straight up short sell as a standalone position, it's very important also to understand how to use weaker stocks as a hedge against your longer position. So we got a lot to unpack today. We're going to do a deep dive into sector rotation. We're going to take a look at some scans. We're actually going to do the scans live today on this call and figure out which stocks meet the criteria. Some stocks reported bad guidance last week and rocketed higher after those numbers. It's going to be interesting to see if they hold the bid this week. Let's be clear. The inflation is not tamed. It was a really good move off the lows. Pretty much everywhere you see, we got housing numbers coming out. It's expected that the sales are actually going to show a decline, the biggest decline since 2014. So if you sold your house sometime in the last 6 months, you are golden, because we're going down from here. Plus, with interest rates expected to go up again, not good for the big picture unless you lock something in right now. So we got a lot to talk about today. I'm actually pretty jazzed up. Don't forget, today is Tuesday. It's not Monday. We normally do Monday, Wednesday, Friday, but we're throwing Tuesday in here because yesterday was the holiday. Hope everybody had a nice weekend. My parents are here. I was very excited about that. So stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. And if I could just ask you to do me a favor, if we provide some value, I want to earn it. If we provide some value, please make sure you click down and subscribe. I'd really appreciate it. Plus, it lets me know that you're enjoying the content. And if we do a good job, give us a thumbs up there as well. Hey, want to say hello to a couple of people? Hey, Juan, how's it going? Good morning. Good morning. Let's see. Dot Square, first day in the boot camp. All right. We got a bunch of really good members in there today. John Oakes, good morning. It was a pleasure having you in the boot camp. I hope to see you move forward to Order Flow Pro with us. And I think you have a phone call with our team today. Would love to see it. Don Postma, one of my buddies in the Order Flow Pro program. So I'm gonna get right into. We're gonna dive right into what we're gonna be taking a look at today. We need to break down a little bit of news just to give some context for what we're talking about here today. So obviously the big story is crude oil futures. We're actually bouncing again. And if we jump into sector rotation, so obviously coming into the week, energy is still near the top of the list. And it's one of the three different sectors that are actually still showing strength across multiple timeframes. Let's make no mistake about it right now. The war in the Ukraine is still raging on. As a matter of fact, it's getting worse. There's a lot of conversations right now about further embargoes, who they're going to get oil from. Bottom line is it's still a mess, which is going to keep the price elevated. We saw an article last week about people doing less traveling because the high cost of gasoline right now. I don't know about you, but we've been kind of cooped up for about a couple of years, and summer's about to come here. I think a lot more people are looking to get out than worried about the price of gas is, just because we really haven't been able to do anything for a couple of years. It really feels kind of nice to get outside. So we're going to take a look at the top of this list here. And let me actually break this down for you. Let me move it up, make it a little bit bigger for you, and scroll back down here. So what's shocking, and I say that in a pretty strong way, shocking, is technology. Technology floating its way towards the top of the list as the week ended. And I think probably some of the bigger ideas, you can actually see we're down a little bit here in the futures. NVIDIA which was a big move off the lows after reporting weaker guidance. So I want to bring up three, and I'm actually going to pull them up on the 15-minute chart just for emphasis to show you how strong. So NVIDIA actually came out Wednesday afternoon. So this is where NVIDIA closed on Wednesday. It was all the way down at 152 after hours. And we're going to bring this all home, right? So this is the rally NVIDIA had. This is the rally that Dick's Sporting Goods had. This is really the big piece here. And Zoom actually had a monster move after earnings as well. So here's the biggest, here's the very first thing that I want to make sure I get across from a mindset perspective. So if you go back to the beginning of today's session, I said I'm looking 70-30 for short sale opportunities this week because it looks like we're a little bit beyond the optimal entry for some of these stocks that moved off the lows. We're setting up short sales because they're really perfect bear flags where we have bigger moves to the downside. So I'm going to go back out to the daily chart. I'm going to show you what I mean by that. So we go over here and we start to take a look. I'm actually going to give you, you want to screenshot this, all right? So basically what we're taking a look at here, this is the rotation, and we're going to start out with consumer cyclical. So we already know that crude oil rallying. So there's a big list of stocks. Actually, you know what? Let's actually pick it up over here first. I want to get into the obvious one, which is energy. Now, if you are a regular viewer of our channel, which I really hope you are, or if you've gone through a boot camp with us, you know that there's something that we bring up. It's kind of a core part of what I do is overcoming one of the biggest challenges I think that active smart traders have, where raise your hand if there's been opportunities where you're like, I buy all the right stocks, but as soon as I buy them, they go down. It stops me out and then does exactly what I thought it was going to do. That's a timing issue. There's two big things to concentrate on in the market. There's timing when you get in, and then there's time in, how long you stay in. Believe it or not, the second part, time in the trade, is more important than timing the perfect entry. We get so many questions, especially from new people coming into the boot camp, where they talk about, tell me the exact entry. I need to know the exact spot. I'm on my way to work, and if I miss it by 3 cents, it's going to matter. How long and how well you manage your winning trades is more important than getting in or out at the exact price. And I want to just give you a visualization here because this is really a part of the big part of what we do, which is stacking the order flow and reading the tape. Stacking the order flow is first spotting, is it obvious? And how long has it been obvious? So if we take a look over here at this spreadsheet, these are the numbers that are telling us, is it obvious and how long has it been obvious? That's only the first part. The second part then is adding more to the equation. Is the market in sync with those sectors that we're looking at right now? So in other words, if the Dow, the NASDAQ, and the S&P, if they're in bearish trends, but other stocks are strong, then we're moving up the chain to where we're mostly trading that sector and that group. So this is a part of tape reading where we're stacking the pieces together, stacking the what we call the power pyramid, which is the market, the sectors, the groups, and then individual stocks. So the more of that pyramid you have on your side, the more conviction. So here's the point that I want to get across. A lot of people are now frustrated, quite honestly, that their winning percentage since 2022 has slowed down quite a bit. And the bottom line is winning percentage doesn't mean anything. I'm just going to say that straight up. So many people get obsessed over winning percentage. The only time winning percentage matters is if you are scalping on micro timeframes and you're doing 20 to 30 trades a day, then you need a higher winning percentage because you're kind of like flipping burgers and keeping your risk smaller. The way that we do things is we're looking for the dominant move and we're looking to stay with that dominant move for as long as we can. So again, this is something I really want you to write down, and maybe I'll post it. Time in the trade is more important than perfectly timing the trade. So if we have order flow, again, I want you to take a snapshot of this because it's very important. If we have order flow, which is how long that buying pressure or selling pressure has been in place, and you can see here what's ironic is the selling pressure is much more dominant because that's the monthly time frame versus just how things traded on Friday or over the last week. How long is more important. But here's the place where, two places actually, where a lot of people get into trouble. So we're actually going to get over the ideas in just a second, is building the argument for how long you should be in the trade. Once you understand how to stack those pieces together, using the market internals, understanding breakouts, how many breakouts happen. Were there 50 breakouts today versus 20 breakouts yesterday? What kind of breakouts did we have compared to how much volume? We might have had 50 breakouts on Friday, but only 10 of them traded normal volume. So those breakouts did not matter as much. We might have had some stocks that rallied over the last 3 days and kept going up, but then each day it went higher, volume went down. So that's not perfect. So when you start to understand these pieces and manage your trades appropriately, you'll be in the good trades longer because you're like, and this, and this, and this, and this, all reasons to hold longer. But the mental part of it you have to be okay with is unrealized profits pulling back in exchange for the next move. So this is something else you want to write down. Big winning traders. And it doesn't matter if you're a day trader or a swing trader, but I think we're talking a little bit more on the swing trader side of things right now. Big winning traders are okay with giving back a small unrealized profit, so little profit down to maybe even zero. So in exchange for letting that stock fluctuate and having a bigger gain. So let's actually talk about the mindset for trading. You put on your initial trade and you're willing to go negative. You're willing to have a stop loss and you're willing to risk a negative amount on that trade in exchange for a profitable trade. What separates massively successful traders, I couldn't think of the right word, is when they have winning trades and they allow those winning trades to fluctuate unrealized profits. So maybe you go from plus 1,000 to plus 400 in exchange for that stock pausing and making the next move. So you hear us talk about it all the time, a push and a pause, a push and a pause. It's adding all those pieces together to hold your good trades longer and being mentally okay with a small profit pulling back a little bit in exchange for a big profit. So these are the two mindset things. You put the trade on, you're okay with a negative trade in exchange for a profitable trade. Once it moves in your favor, you're okay with a small gain in exchange for a big gain. Once you understand that, that makes the difference. Now, the third part is optimal entry. And that's what we're going to talk about with a lot of the energy stocks right now. The optimal entry is essentially looking at a price and say, well, what does it normally do prior to you buying it? And that's the problem that a lot of people have is they do the scans, they find the ideas, the stocks are exploding, but they don't recognize what the stock normally does. So in other words, if the stock normally goes $20 and it already just went 18 and you buy it today because you saw it on Kramer last night or wherever it happens to be, that's not one of the best stocks to buy now because it's already gone what it normally does, or at least most of it. So that's the push. Then we got to wait for the pause. So we have order flow, tape reading, which is stacking the argument, and then we have timing, which is the optimal entry. And timing is the last part. It's actually the least important part because that decision doesn't get made without the other pieces. All right. So we're going to break this down. We're actually going to work our way through this list right now, and we're going to go through sector rotation, find ideas on the buying side of things, and find ideas on the short side of things. So short side means we're looking for stocks to go down. Now, the thing I want to talk about, especially in the market, is what we had last week and in a lot of these stocks here, which was a short covering rally. So let's specifically go over to the SPY and this move right here. And I want to pop the volume in here just to give everybody an idea. So what you can see here is we want the volume to be increasing every day on the move higher. And in this case here, it's kind of staying neutral. We want to see it climbing like that, right? We want to see it climbing to the upside. So what a short covering rally represents is in this big down move, which you can actually see here, we've actually been in a down move from 2022. The faster the move to the upside after selling, that's people exiting their trades. That's why it's called short covering. Short sale, covering that short sale means you had to buy it to get out. And that's what caused that buying pressure. So what we're looking for this week, and I want to map this out as clearly as possible for everybody, because this is how you level up your trading. A lot of people that come into our community, they're like, it's just so overwhelming. There's so much to look at. You're not lost when you know what to look for. So what we're going to talk about right now is what I'm looking for this week. And then we're going to run some scans for longs and shorts this week for new opportunities between Monday, today's Tuesday through Friday. So we're going to be looking to initiate some new longer term trades. So what I'm looking for specifically in the market, you can actually see that we're down here. So I'm actually going to just use the current price just to use this as an example. So right now it's at 413 and change. So we're kind of right down in that area right there. So it's actually trading $1.70 lower, just a little bit below. So that is going to be what I call my line in the sand. That's going to be one of the arguments. Now, there's a whole bunch of arguments that you want to put into the trade, but that's going to be one of the arguments for me to determine I still want to be a buyer after the way stocks rallied really hard. So this is the key. We had to push off the lows. A lot of these stocks are in bearish order flow. So everybody emailing me this week, sending me messages on Facebook and YouTube and Twitter and that kind of stuff. How do we know that I should still be buying this week? So here's the best case scenario. Best case scenario for this week is we open here. And again, I'm just using this as because that's where it is right now. Best case scenario is we open here this week and we go sideways. For us to be aggressive buyer this week or buyers with conviction, which is, again, getting back to time in the trade. Conviction leads to holding good trades longer. So right now, I'm telling you the next 4 days what I'm looking for, maybe even specifically 2 days. I want the market to do absolutely nothing. Let that sink in for a second. I want the market to hold the opening price where we are in that line that I just showed you, wherever it happens to open when the market opens. The best case scenario for us to start looking for the best stocks to buy now and have a little bit higher conviction level is after that rally that we had now goes sideways, which means the sellers did not come back. They hit the skids. They went on vacation for Memorial Day. They didn't come back. That's best case scenario. So when you push up and go sideways, and especially if we pause, that means the downward pressure is slowed down a little bit now. If we see that, and again, let's do the whole thing here. If we see that, then we know that we're going to be dipping our toes into the groups of stocks that have shown strength over time, which right now is energy. Basic materials have started to work their way back up the list and working our way over here to utilities. So that's the big picture. If that does not happen and we trade below that line that I just gave you and volume increases on the downside, I will now be looking for longer term swing trade short sales. So we have buying opportunities that we're going to go over right now, and then we have short selling opportunities. Obviously, at the top of that list is the energy stocks right now. So the energy stocks, they're opening higher again as crude oil futures rally again. It's the right area to be in. It's the right sector. It's the right group of stocks. But now we need to talk about the optimal entry. How far are these opportunities compared to what they normally do before they pause? It's that pause that we're looking for to manage the risk to put on the next trade. So we're going to go over a bunch of stocks in the energy sector that are interesting. So again, energy sector, scooting on over to the list of stocks that match that criteria. So now we're just going to scroll up and we're going to go down to stocks and this big list of stocks where we're looking for ideas to be a buyer of today. So the list of ideas that I have in the energy group of stocks today, ExxonMobil. Now, if we take a look at what ExxonMobil normally does, you can pretty much eyeball over here how far it normally moves when it has a bullish run. And even if we just take this last one here, 84 to 93, that's a $9 move. Okay. And if we take this move here from 89 to 98, that's an $8 move. So what does that tell you right now about being aggressive with a new buying opportunity in ExxonMobil? If it's already gone $8 out of the $9 that it normally does, should that be an aggressive trade from a position perspective? Again, we're getting a little bit deeper now into really separating ourselves. We don't want to just be chart readers. We want to think and act like a trader. So in this case here, I like ExxonMobil, obviously, but it's not a trade where I'm going to have full share size on my initial trade. I'm going to expect it to fluctuate a little bit here, maybe even pause. And then when it comes out of that pause, I'm going to look for a new piece to add to my original piece. There's a couple of other ones that are still breaking out. So we're actually going to break those down right now as well. So ExxonMobil, PXD, which is actually a little bit closer. Oxy, which is just breaking out right now as well. PVN and CVX. So those are some of the buying opportunities that I'm looking at coming into this week. So if we go back over to the top stocks in play, you can see that energy is dominating the list of stocks, and you can see the percentage gains across the board. Now, if you happen to not be in my community, obviously, I hope I'm inspiring you to build these same kinds of lists where you're looking at order flow over time. And if you happen to be new to the channel, what makes what we do different and what makes what we do a little bit easier to trade, and again, easy in context, please keep it in context because you still need to learn to make money. Learning what to look at is a big part of the battle, but then learning how to make money is the second part. That's kind of like the real skill part, right? But if you're in the right stocks, it certainly makes it easier to have conviction. So the way we talk about things, and I'll just keep it very high level here, just to give you some ideas heading into the week, it's our job to determine, is it obvious? Is somebody obviously buying or selling that stock right now, or that group of stocks right now? The way a lot of people do it is they first look for an entry and then hope the market validates their entry. We do it the opposite way. We first identify where is smart money paying attention to right now, and then we just look for a spot to piggyback what they're doing. So energy, obviously a part of that, right? And now you can break down the individual sectors. And actually, you know what? Let me actually zoom this out just a little bit because I really want to bring this point home for you. If we break this down and we start to break this down by sector, we can see that basic materials and specifically LTHM, that actually is one that we've been trading, and it's been in our game plan pretty much every week. I might call this an exhaustion candle. I'd probably wait for this to pause now. You can see it rallied here and paused and rallied hard again. I'd be looking for this. This is kind of the same thing. So I'd be looking for this to probably pause somewhere down in that 32 area. Okay. Same thing with CC. That actually had a pretty decent week. I'm not looking to trade Baidu as a swing trade simply because I'm not holding overnights on any of the Chinese stocks. Consumer cyclicals, PDT, Foot Locker actually broke out pretty cleanly after last quarter's earnings. So you can see this is a pretty clean move. We're really looking for this one to get back up to fill this gap here, which is only about maybe another $5. I do like that it closed out of that breakout level. I do like that it's trading cleanly since earnings. I would have liked to have seen earnings rally a little bit. So this is actually a good example. So remember, we're talking about building the argument. What do I want to see? What don't I want to see? What do I want to see? If I see it, great. If I do want to see something and it doesn't happen, I just leave it alone. That's a big lesson as well. Foot Locker, FL, broke out, but did not break out on good volume. So again, we're stacking the pieces. Best case scenario, it exploded. Everybody got involved, and now we can expect it to stay there. That's not actually what we saw. So this is, see the volume here, how it decreased on this bullish gap day and this big reversal day. I'd prefer to see this. So again, best case scenario now for Foot Locker for me is we pause a couple of days above this 3250 level. Looks like we're going to stay right above that level. So a couple of days pausing on decreasing volume would be pretty good here. I hope the single biggest thing you're getting out of these live streams with me, and again, I'm very grateful that you're here with me. I hope that I'm making you think a little bit differently, because a lot of people feel like trading needs to be a lot more complicated than it actually is. The hard part of trading is here. It's the mental part. It's not doing something when you don't see something. It's holding good trades when you got that big part, that big trade on the hook. But what I'm hoping I'm inspiring you to do right now, and I keep mentioning this over and over again, is I'm hoping to make you understand that we're actually planning out the week. So how many ideas have I talked about right now where I said, if this happens, then I plan to do this. If this happens, I plan to be a buyer. If this happens, I plan to be a short seller. That's where trading becomes a lot less stressful, because I already know what I'm looking for, and it doesn't matter what the market does. I hope I can inspire you to think about your trading that way. And a lot of people might call that predicting or forecasting. I'm not predicting, and you shouldn't be predicting either. You shouldn't be trying to predict. You should say, here's my edge. And obviously I'm showing my edge right now. Or obviously my edge is tracking the order flow, right? We're doing sector rotation. We're tracking the order flow over time. These tech stocks we're going to take a look at in a second. We're tracking the sector rotation. So here's the thing that I hope I can inspire you to really think hard about. When you have an edge, then the only thing you're looking for is the edge. The frustrating part for a lot of traders is they're trying to trade everything instead of trying to trade one thing. When you understand that's the only thing I'm looking for, it doesn't matter what else happens on Wall Street, because that's the only thing I'm looking for. The only thing that changes is how long has that order flow been valid. If it's only for an hour, then I'm trading it for that hour, and that'll be more of a cash flow trade. But if that hour is in sync with the last 2 days, the last 2 weeks, the last month, then we have what we call harmony, and we can hang on to those trades a little bit longer. So again, I use this all the time. If you could think about driving, when should you step on the gas and when should you just be like, all right, stop, go, stop, go? That's a big part of trading. So go back to what we said at the beginning of the call. Time in the trade is more important than the perfect spot. Keep that in mind, okay? It'll also take a lot of stress off you. So we're actually going to go to the other side of the market right now. So those are some of the buying opportunities you're going to be looking at. Some of the top stocks here on the bottom of the list. Here's a list of some ideas on the tech side. And actually on these tech side, you can actually see Nova, Run, and ENPH. They're tech stocks, but they're solar. So again, this is really where I love to dig into this kind of stuff, because we just picked out 3 different stocks in the same group that met the criteria for the top 27 stocks that ended Friday, but those stocks met criteria over the last 4 weeks. So that means now we have more than just one day of buying in the solar group. So let's actually take a look at those 3 stocks and see if we got some opportunity to trade them coming into this week as well. We talked about Run, which if you remember last week, we actually called this bullish engulfing candlestick as an opportunity. We had this push up, we had this pause. This candle traded below that low, traded back above, and closed strong. And this is the kind of buying pressure that we had on good volume. So we had Run, we had Nova, and we had ENPH, which a lot of people have now determined that that's actually a bigger stock in that group. So we're actually kind of at resistance here in ENPH and Nova. Okay. So the most exciting part that I want, and again, I really hope I'm inspiring you to think about trading in a simpler way that makes it easier to make decisions. We just basically did our research in multiple time frames. A lot of people know it as multiple time frame analysis, but we look at it a little bit differently. We're looking for order flow over time. So all you need to be thinking about right now is how long has it been obvious? So these ideas that we're looking at right now have been obvious for about 3 weeks. That's pretty decent buying pressure. So those 3 stocks are going to be in my list as opportunities to buy for this week. Now let's break it down to the other side of the market, because we said at the beginning of the call, we're going to be looking at some ideas 70-30, where I'm probably going to be looking at ideas to short sell. Okay, so that means I'm looking for those stocks to go down, but they already have selling pressure. So we're going to work our way over to that right now. And we're going to work over to Finviz. Finviz is a very easy stock scanner to use. And we're going to go into the screener. We're going to go into my preset, which is this. So over $15. Let me actually zoom that in a little bit for you. Okay, over $15. Average true range, and you can see the criteria there. What average true range means is basically volatility from the low to the high. And then we're going to look at average volume. So 334 stocks meet this criteria before we even break it down. Now, that's actually an important statistic as well. Out of the thousands and thousands of stocks on Wall Street, only 334 stocks meet this minimum criteria. I haven't even broke it down yet now of whether I want to be a buyer or a seller, but these stocks have volatility, which means opportunity, and they also have liquidity, which means I can pretty much get in and out where I want to, and that means the smart money has attention on those stocks on a daily basis. Now we're going to break it down for short sale opportunities within sector rotation, okay? So if we go over here, I'm just going to pull this up for a second. We're going to go into groups, and we're going to take a look over here. So you can see, obviously, Friday was pretty strong. Last week was pretty strong, but now we're going to look over here a little bit longer term. Consumer cyclical, technology, and consumer defensive. We're going to take a look at these guys right now, okay? So we're going to break that down now. We're going to go into the sector. So we're going to take a look at consumer cyclical. And that broke it down to 57 stocks. And you can see here, this is the group, right? But you can see some of them were positive. What we want to do now is we want to break it down to, since we're looking at short sale opportunities, 40 stocks met that criteria based on sector rotation, consumer cyclical. So think about what we just did. We just said, where is the smart money dumping stocks? And is there a way that we can hop on their back with sector rotation and find the ideas that have the highest likelihood of going down? So that's one part of the equation. We're going to break this down even further where we know they're stronger over the, weaker over the last 4 weeks. We're going to take a look and see, are there any stocks, while the market rocketed higher last week, are there any stocks that actually traded down last week? So those stocks are longer term bearish. They have selling pressure, selling order flow, and relative weakness to the market where the market went up, but these stocks stayed flat. So those would be the first stocks that we would expect to be a short seller of this week. So you see how we're building the argument? There's no guessing. It's a question of putting the pieces together. If this happens, then what do I plan to do? If that happened, which stocks have the highest chance of going higher? If that happened, which stocks have the highest chance of going down? This is how you really have confidence in what you're doing, because again, we're not predicting. We're saying, where does smart money have attention and how can I piggyback them after I learn how to track them? So now we're going to take the scan a little bit further and we're going to do a little bit of a deep dive into, we have now 40 stocks that are below the 50 period moving average. Just to take a look, are there any stocks that happen to be down last week as well? And these two are at the top of the list. So these would be two stocks that did not rally hard with the market last week. So let's actually break that down a little bit further. Were there any stocks that traded down on Friday with the market rallying hard? And now we have 19 stocks. That's pretty darn interesting, okay? Here's an interesting thing. We know that the market traded really hard Wednesday, Thursday, and Friday, and now we're looking at 19 stocks in consumer cyclical that actually closed lower on Friday, which is showing a one-day relative weakness compared to the market and 4 weeks of selling pressure. So these would be the stocks. So I'm going to put these up on the screen again. You can take a look and dive into these stocks a little bit deeper. So that's the list of stocks right there. There's 19 of them. So if we actually sort them by how much they closed down on Friday, and then take a look at the charts, we then do a little bit more of a deep dive into which of these stocks would be looking for a short sale. ROST is actually one that's interesting because it actually filled the gap after getting hit pretty hard. You actually heard me mention that before. When a stock fills that gap, that's usually an area where that's the first area that it reaches for profit target. So earnings came out. And again, look at this, rallying on decreasing volume. If this rally was real, this volume would be going up here, and it didn't. We had a couple of other stocks that did essentially the same thing. I think Kroger was one of the stocks that actually had a pretty big rally coming off of the lows as well. So I'm just going to go back over here. I want to give everybody a chance to take a screenshot of this. These are some of the ideas on the short side of the market. The other group of stocks, I want to go over here to consumer defensive and communication services. So we're actually going to do the same exact thing. We're going to go to consumer defensive, and you can see these 4 stocks actually popped up. They were all negative last week with the market rallying. And then we're going to actually take the last one here, which is technology. Actually, we're going to hop on over to tech, and we're going to do a little bit of a deep dive over here. And look at that, 20 stocks in technology actually closed down when the market rallied. That's a big list of stocks. Now we're going to do the opposite side of the market. I want to give you a list of stocks for this week. And again, not necessarily today to the spot, but for this week. We're building the argument to say which stocks have the highest likelihood of continuing to move in that direction. So those were short sales where I said we're looking more so to stocks going down. We said that the market, wherever it opens today, that's going to be the line in the sand to add or remove to our conviction. We also said best case scenario to be a buyer for the rest of the week. We want the market to do nothing on Tuesday and Wednesday on light volume because that implies the sellers did not come back. So you see how we're adding, it's just write this down. And you're like, oh, if that happens, this is what I plan to do. That's where trading becomes easier and quite honestly, a lot more fun because it's less stressful because you know what you're going to do before you need to do it. So let's actually walk to the other side of this now. I'm going to take this off. I'm going to take that off. And now I want to take a look at a list of stocks that are above that same key level. There's 169 stocks. Now, this is going to be a pretty big one. So I'm actually going to filter this down even further to the 20 period moving average. And we didn't cut that many stocks out of that. So now this is where you got to dig a little bit deeper. Okay. Which stocks were up the most on Friday and which stocks were up the most from the close? And no stocks met that criteria. So let's break this down a little bit further. Which stocks were up on Friday from the close, from the open, and Which stocks did at least their normal volume? None. That's a pretty big deal. None. Let me take that off of there. None. So what does that tell you? If we remove this here, let's actually remove that. What does that tell you? What does that tell you about institutional activity and the buying pressure that we saw on Friday? There's 42 stocks that meet the criteria. You can see that list here. Actually, let me get the ETFs off there. I don't want those guys in there. 29 stocks, right? You can see that they're mostly energy stocks. If we break that list down, a couple in communication services, we talked about Zoom. So what does that tell you about what the smart money was buying on Friday? Even though we closed higher, 0 stocks traded average normal volume with all of this criteria on the scan. Now, some stocks traded normal criteria, but we're looking to be smarter than that. No stocks met the criteria that was above the 50-period moving average, positive from the open, that hit that volume criteria that we're looking for. So remember, every stock that goes up, somebody's spending real money to make that happen. Now, we had buying on Wednesday, buying on Thursday, buying on Friday, but the market kept rallying into the week on less and less volume. So that meant the smart money's attention was moving away from those new highs. They were probably out already, quite honestly. So that's why we built the argument from the top of today's call about here's the sector rotation. Here's what we're expecting in the market this week. Then we finished up the back half of this call basically saying, here's the stocks we'd be looking to buy. Here's the stocks we'd be looking to short sell. And then I challenged you to say, before you hit that buy button, what does the stock normally do? So we probably covered around 80 stocks today. You can watch the video again, put it on pause, take that list of stocks, and those would be the ideas for the week. But I think what's kind of fun, and I love using the word fun for trading, because once you have all the pieces, it is fun. That last thing that we discussed, which was no stocks met that criteria, that strict criteria that I want, that gives me conviction. So what does that mean? That means I'm not going to be aggressively buying today. If I do, it's mostly going to be short-term trades, because some of these stocks are either too far and there'll be cash flow trades for me, or they had hard rallies last week and they kept going down in volume. So you got to really level up your trading this week and say, I'm only buying if this happens. If that does not happen, then I'm going to be looking to short sell, if you understand short selling. But let's actually get to that last part. If you're not comfortable with short selling, that's okay. A lot of people aren't. I encourage you to learn it. But if the market does not match what you want to see, gosh, it's okay to be in cash. You don't need to trade for the sake of trading. You hired yourself as a money manager, and that means that you got to put your money in harm's way when the best opportunities are unfolding in front of you, which right now, obviously, energy stocks are pretty darn strong. It's not a question of whether they're a buying opportunity. It's a question of how long you plan to hold it. If what you're looking for is not there, it's super important that you're okay with being in cash until it is. I'm going to leave you with that. I'm going to leave a video up here for you to watch right after this. Have an awesome day. Don't forget, today is Tuesday. Watch this video one more time. I covered a bunch of really actionable stuff and gave you a bunch of stock picks. So have an awesome day. Let's have a great 4-day week. Let's make it a profitable one. Thank you so much for joining me. If we gave you some value, hit that thumbs up and make sure you subscribe. Thank you so much, everybody.